Hello, I'm Tammy Devine, back here again with Joseph Domino, enrolled agent, certified financial planner who practices in the state of California. Joe, I'm so glad to be talking with you because this tax stuff is difficult. And one of the things that you and I have been chatting about, which I've really appreciated, is that you can share to two tax secrets to save people money if they're filing on their own. Now, of course, you don't want them necessarily to file on their own because you want them to come to you probably, but some people are just going to try and do it on their own, and they could miss some ways to save money and possibly even get a refund. Is that right?
That's right. That's right. Hi, Tammy. How are you doing? Thanks for inviting me on your show. Um, yes, there are certain things that you can do to save money, and I think two secrets is just not enough. There are just so many secrets out there.
That's
but
good.
uh, but when
We'll,
people file
we'll
their own,
distill it down to two today.
okay. Uh, I guess what people don't realize is that there are a lot of things that you can use within the tax code to help you save money. So, if you have, for example, you want to save up for your retirement, just say we've at your workplace they have 401ks, they have 403bs, and all these company savings plans that you can take advantage of. Which, when you contribute to these kinds of plans, it's actually saving you money there because it's not taxed. Those dollars that you contribute are taken off of your gross income. At the lower level, we have IRAs, traditional IRAs, Roth IRAs. We have SEP IRAs for self-employed folks. So any dollar that you put into a traditional IRA, for example, for 2023 tax filing year, and this changes every year for inflation, they move the number up. But for this year that we're in right now, this 2023 tax year, you can put $6,500 into this IRA, and it's tax deferred, which means you're deducting it on your tax return, so you're saving money that way. But later on down the road, when you retire, then you have to pay tax on that money that you take out. So you've got that kind of an IRA, that traditional IRA, and plus you've got a Roth IRA. A Roth IRA is more of an after-tax contribution. So it's not something that you can deduct from your tax income, but when you take it out years down the line, when you do retire, those dollars that you've contributed and the earnings that it's made are tax-free. So there are certain benefits for either one of those choices. So I guess that's really the secret, is just knowing how to maneuver that. Um,
So that's secret number one is the IRA. And can you, just for those of us who don't know anything about the tax world and might not have those kinds of retirement vehicles set up, IRA stands for,
it's an individual retirement account, is what it is. So they just abbreviate it as IRA.
and just boiling it down to the simplest terms, how does it work exactly? Like, what is it?
Well, an IRA, like I said before, is something that you can contribute to, and you can do it at your local bank, through a brokerage company like Fidelity or one of those other companies, and they set you up where you can put money into these accounts, and you're actually invested in mutual funds or bonds or just in a regular interest-bearing account. So the money that you put in, that's your contribution, and the money that it earns is the one that really kind of use the power of compounding to try to make it bigger and better than ever over a period of time, over years.
And they can come out of your employee paycheck too if you're working for a company, right?
Yeah, they have those kinds of IRAs, and you can just do it on your own without the company even involved. So you can just open up this account, just go down the street and or go to the financial person that you know that does this, and they can set you up with these types of accounts.
So secret number one is the filing your IRA, and is it. I think, did you mention, is it dependent on your age bracket whether you use the traditional versus the Roth?
Well, it's not age bracket driven; it's more of a tax bracket driven thing. So Uh, we look at things, and I don't know if we've talked about this in past interviews, but your adjusted gross income, your adjusted gross income. So it's based on how much income do you have, and there's a phase out range to if you could contribute at all to these if you have a plan at work. So just say that you have a W-2 job at some company, and that company offers you a 401k plan. If you have a 401k plan at a company, your income drives how much you can put into this IRA. If you do not have a 401k plan at work, it doesn't matter about that at all, about your income limits. You can always put money into these IRAs.
I think it's the savings, the amount that you save or the amount that gets taxed that you've mentioned to me that depends on how old you are, right?
Right. So I really call it, there's between the traditional IRA and the Roth IRA. Those are the two major types. There's one, the traditional one is more of an immediate gratification. So it's like I want to get a tax benefit right now. So every dollar that I put into it, I get to deduct it on my taxes. The Roth, on the other hand, is I don't care about that deduction now, but later when I take the money out when I retire, I don't want it to be taxed. So that's a delayed gratification. So it's like, what do you need now to help you to drive you now versus you think you'll need later?
And what is that retirement age when you can start deducting? I think with the other, it's not 65, I don't
So
think.
yeah, so 59 and a half is when you can take those monies out, those funds out, but 73 is when you must take them out. So there's actually a schedule, an IRS schedule that says, according to your age, here's the amount they want you to take out.
Okay. And you really, I mean, I know people want to try and do this kind of thing with the tax filing on their own, but at least get advice ahead of time before you start filing with someone like Joe, with
Mhm.
you, right, Joe,
That would
to
be nice.
make sure it's done properly
Yeah.
because there's penalties, right? You may end up having to pay quite a bit if you're not doing it correctly.
Right, right. So people that open up these types of retirement accounts, if they decide that they need to take money out for some reason before that magic retirement age, there will be penalties involved. In fact, 10% penalty is unless you have some kind of a major health issue or a disability thing or something like that. So,
That's one tie that you don't want to make.
mm.
So secret number two, Joe, that would be HSAs, right?
Oh, you want to know about HSAs?
Yes, please.
Everyone's asking about HSAs. Some companies offer these, but you don't need a company to have that to do it. So you can actually open this up yourself by, like I say, going to like a brokerage account or your local bank may have these. But what you need to have in place is a high deductible health plan before you can even open up this HSA, health
Okay,
savings.
break that down. High deductible health plan.
Yeah, high deductible health plan. So you have a health plan. Everyone has a health plan. So that deductible has to be $1,500 if you're a single person, or 3,000 at least if you're a married person. So your deductible has to be that much. So a lot of people, they have these before even having an HSA, they have these high deductible plans because the higher your deductible, the less your monthly premium. So it's like they're getting probably something less than what they should get by having such a high deductible and low premium.
And that's the deductible, of course. And I just want to make sure everybody watching totally understands what we're talking about here. The deductible, of course, is the amount that you pay out of pocket first
Mhm.
before anybody else kicks money in.
Right. I mean, there are really rich plans that say we're going to pay every single dollar of medical expense that you have versus something that's like a la carte or something that's, high deductible, which says that we want you to pay this amount before insurance kicks in. And that's what high deductible is. Yes.
Mhm. And then the premium, of course, is what people pay every month.
Hmm.
So, okay, all right. So, how can this help during tax time?
Well, first of all, like I say, you've got to have that kind of insurance in place to begin with. That's point number one. And point number two is opening up this health savings account, this HSA, which you're funding it like an IRA, like we spoke about before. You're funding it and you're putting money into this account.
And that could be
And
from your employer, um, or
or on your own, or on your own,
you work for yourself.
right? So you can be a single person, you can have your own business. I mean, you can open it for any of those reasons. But it's mainly to have this account for qualified medical expenses that the insurance doesn't pay for. So I mean, you've got this high deductible plan, and everything that you've got to pay before that deductible, for example, is on your own, is on you. But if you had another account like an HSA, you've already got monies in there to get to and pay for these qualified expenses.
Yeah.
So let me just go a little further in this is that the HSA, the reason why it's this big secret is because you may not realize the taxes that you're saving, the taxes that you're saving for having an HSA plan. First of all, any dollars that you contribute are deductible. You can deduct the dollars that you contribute on your tax return that you put into this HSA. Second, you can actually not pay tax on all the earnings that it makes. And third, any monies that you take out for those qualified expenses are tax-free as well. So I'd like to think of it as the triple tax-free method. And Congress, I think they were out of their mind when they came up with this thing because it's like, how can they give us a triple tax-free vehicle like this? And it's just, I don't understand it, but I'm taking it because it's in the tax code. They're offering it. And there's an example of something that's in the tax code and it's there for us to take, to use.
I think maybe most of them were on vacation and somebody
Maybe.
that in.
Yes.
Yeah, because that's rare that that we get that kind of help, I think. So I wanted to play a video, Joe, and I think this is how most of us feel when when it comes down to tax time.
Mm.
I love watching these guys. Just the frustration when it comes time to do this kind of thing.
Um,
How can we get away from all of this frustration?
well, I mean, it is tough to do on your own if you're not in the business or it's not a very simple kind of return. But if I could just tell you a little story about when I was growing up, if I could just add that, because you showed me these things and I'm like, wow, it just brings back some memories. But growing up, my dad did our taxes in the house. He was the tax person. He wasn't a tax professional, but he did the taxes and he made it work. But every January, there was a table in the dining room where he used that table to put all the tax papers, all the discovery papers where he was looking things up and the receipts and just piles of stuff. And one day I walked in and I said, Dad, can I help you? Can I help you do what you're doing? He goes, I'm doing the taxes, Joey. He called me Joey. I'm doing the taxes. I go, well, it seems like it's a lot of fun. And he goes, no, it's not fun at all. In fact, he said, Lord help you if you ever need to do this yourself on your own. And look where I am now. I'm actually doing it on my own for other people too, as a matter of fact.
That's awesome. Maybe he was kind of like prophesying over you.
Maybe, maybe.
And this is your future right here. Oh my goodness. But you saw it as fun as a kid,
Yeah.
huh? That's great.
Yeah.
Yeah. So I think ultimately, probably the easiest way to take the frustration out of the taxes is really to go to a professional like yourself who, like, this is their bread and butter. This is what they do. They're in it day in and day out. They have the education, the knowledge, the experience, all of the experience to be able to help you do that. But if you want to do this on your own, there is a ton of software out there, right, that people can
Mhm.
use. It
Mhm.
can get kind of expensive. But maybe you can at least pick the brains of your friends. I'm glad I think I have like three kind of CPA friends and CFA friends who I can go to and be like, what about this? And can I deduct
Right,
this and that, you know?
right, right.
So at least get some good advice before you actually file that tax filing, right?
Yeah, and people may not even know what to ask. I mean, it's like, you know,
Because you don't know what you don't know, right?
yeah, exactly, exactly. And sometimes when I have a brand new person walking in, they say right away, "How much do you charge?" And instead of asking the price, you say, "How much is it worth?" You know, because I'm going to save time, I'm going to save money. You're going to show me, the best way they can possibly show me within the correct tax law. And I don't feel like spending a whole weekend looking things up. I want to go to somebody who can get it done in a shorter period of time.
Yeah. All right. Well, for all of those that felt like those two guys in the video I showed who are like biting their pencil and putting their hands over their head in frustration, Domino Bronson and Associates is a great place to go. Joe's a great friend of mine. We've known each other for years, and just so knowledgeable in this world of taxes and financial planning and retirement and all that good stuff. I really appreciate you taking time and helping walk me through some of this stuff, Joe. It's tough, but you make it easy to understand, and I appreciate that.
No problem. Anytime.
All right, we'll talk again soon, Joe.
Okay. Take care.